It's been a few weeks into the big 2026 and I managed to flip a 90 USD account to over 800 USD. Let's make this year our most profitable year, ladies and gentlemen, and we can achieve that by sharpening our skills. So make sure to stick to the end of the video to learn how you can improve your trading skills. Don't forget to leave a like and comment down below your thoughts. Now, let's get into the analysis. Okay, so on the side of the history, you can see the 90 USD was deposited on the 13th of January. Now, let's go over to the chart and we'll start by showing you guys the weekly bullish order blocks, and that order block was respected nicely. You can see there's sort of like a nice movement, and it first gave us a stop hunt before it reacted off of that weekly bullish order block. Now, if we see, or if we check on our left, we can see there's a rejection block which literally is exactly the level where we believe price started that chain reaction as it shoots up. So on the daily, when it shot up, it gave us that change of character right above there, and when it returned back down, you can see it respected the daily bullish order block right there. And yeah, it was tapped in multiple times because there is also that rejection block on the daily that was hit, and it continued to shoot up. But before it shot up, it went back to the daily bullish order block, another one, and that's when it broke structure. So this structure, price ended up coming back into the range, and it respected the mitigation block on the daily order block, and now this is where we are currently at. But if we zoom in exactly where it reacted, you can see on the 4 hour it respected the 4 hour order block. So we can now get a feeling that market is in a bullish institutional order flow. You can see there's a 4 hour that was respected and the 1 hour rejection block that was respected inside as well. So this is a bullish institutional order flow, and market keeps on shooting up and respecting down close candles, and it's just going to shoot up. So what I believe is market is targeting the sell side liquidity below that low, and you can see there's evidence that there's also sort of like a fair value gap right below. You can see that fair value gap, and I believe market wants to dip down there, fill the fair value gap, hit a POI below there, which our POI right there, I think it's literally like a 1 hour mitigation block. Or if we zoom in on the 30-minute time frame, you can see it's a mitigation block on the 1 hour. But on the 30-minute time frame, if we zoom in and closely try to pinpoint exactly where we want it to react off of, is the 30-minute order block. So that's why I think it's going to react off of. It's also in confluence with the 4 hour order block right there. So there's 4 hour order block right there. There's also a daily order block right there. Of course, it's sort of weaky, but if we check again, there's also a rejection block right around that same level where I believe price has to tap and react off of. So price will dip down to those two trend lines that I marked, or that zone, and do shoot up to the buy side liquidity above those highs. But that's a long way to shoot up there, and of course there's an inefficiency right above there, which I believe price has to shoot up and fair in price. So VIX 90S, it's a quite strong instrument on its own, so I will have to go in. We have to be so precise, but of course 90 USD I think like it can actually handle it. So what I'll do is to enter 10 positions, which is 0.1 lot sizes, and I believe this is an accurate trade because you can see there's so much confluence right around that level. If you guys want to rewind, you can rewind and see how many confluences were there at that level. We might actually miss it, but I don't believe so. So we'll have to see what happens afterwards. Okay, so right around this time we had just gotten activated into our buy orders, and you can tell it was nice reaction. We're around 20 USD ish profits roaming around there. We hadn't got into the big bucks. So the aim wasn't for it to shoot up to the buy side liquidity, but for us to get some satisfactory results. And after a short while, we managed to bank in 400 USD from just 90 USD. The trade was super clean, by the way. It was a nice clean entry trade, and the movement was quite small. It wasn't quite a huge movement, but of course I'd aimed for it to shoot up there, but I don't quite have the confidence or the patience enough for me to hold. So I decided to close at 506 USD, and our balance, you can peep where we entered and where we closed. Nice clean entry, satisfactory. Now let's move on to the next trade, which is on VIX 50S. Okay, so we'll continue with our VIX 50S, and you can see right there 506 USD as our balance. Now, I want to point out this first, should I say, market structure that we have, which is the break of structure right below that high time frame low, but I couldn't make out the triangle to show it, to highlight the fact that it hit the weekly bullish order block, and then from there, that's when it has been shooting up ever since. Like, it continued to just trend upward. It's been in a bullish trend since. So my plan is to just buy VIX 50S. Now, it gave us our change of character right at that high, and after that it went back into the range and it respected the bullish daily order block, and you can see it respected the rejection block, to be precise. Now it continued to break structure, and it broke that tiny structure right there it created when it came back down to respect the rejection block, and it kept on shooting up. This is a training market, and now when it came back, it hit the mitigation block. So we start our sort of analysis right there. That's where I want us to focus on. So after it broke structure, where we are currently at right now, market reversed back into sort of that range, and it gave us sort of a wipe. So after it wiped, if we zoom in on our left on the 1 hour time frame, we can see that it hit an order block, which is the 1 hour order block. And if I stretch this 1 hour order block, you can see it was cleanly respected. Market, you can see right there, it was grabbing liquidity, making some sort of a stop hunt right there before it continues its move up. So it went into the range and hit another bullish 1 hour order block, and it kept on shooting up. Now, when price went back into the range, if we look closely, you can see there's a high that price broke structure right there, and after it broke structure, it returned back into the range, and you can see there's an institutional reference point that it respected, and price has been building a bullish market structure ever since. So the institutional reference point it respected is that mitigation block, and then now we can see there's sort of like a bullish institutional order flow, and market just wants to respect bullish order blocks or bullish institutional reference points, and it's just going to keep on shooting up. This is what I believe market has to do. So if we look closely, price went up to wipe. It didn't form like a close above those highs, so it wiped, then came back, formed that stop hunt, and then it respected the 30-minute order block. So from there, went back above those highs, and you can see there's sort of like, should I say, a break of structure right above that high. But yeah, of course, it respected the 15-minute order block, but I want us to pay close attention to the high that it reached at right there, which I'm not sure if it hunted the stops. Yeah, let's say it hunted the stops there. Now it's returning back into the range, and it's targeting the sell side liquidity below that low. So we're obviously going to be buying at an institutional reference point below that, which is after it fills the inefficiency and after it hit the 15-minute bullish order block. So that's how simple our analysis is. We're waiting for price to come back down, hit the 15-minute bullish order block, and then we'll buy from there. So our target will be a buy side liquidity right above those highs, and you can see the highs are relatively equal, so I would say it's a nice sort of pool of liquidity, which is the buy side liquidity. So that's where I started staking in my buys. You can actually quite see there's also a rejection block right where I want to buy, but I did not highlight it. So I was trying here to highlight the fact that there's also a huge pool of liquidity right above a high, an all-time high. So that's why price has to keep on shooting up. But after that, I kept on, entering my buy positions, and this is 0.02 on VIX 50s. Remember, this is quite powerful because VIX 50s is a powerful instrument on its own. Even the smallest lot size can do major moves, and it can damage your account or grow your account exponentially, just like that, without too much time or without holding for a lot of time. So I entered 10 0.2 lot positions, and this is on a 500 USD account. Let's see what happens after some time. So right off the bat, market hit us and it went into some profit for a small amount of time, but then it dipped into the negatives. You can see it penetrated our order block and we were bleeding. We were 140 USD-ish in the negatives, and it was really frustrating. But after some time, we went into the blues. We were cruising at 300 USD or so. There was a small movement and we're cruising around 300 USD in profit, placing us at 800 USD profit. But Forex is a tricky game. I did not want to close because it wasn't satisfactory. I believed maybe we'll close at 1.2 USD, but later on it reversed, and when it reversed, it came back to our original point of entry, and I started getting some doubts, but I still had hope that it will continue shooting up. Remember, here I was thinking it will reach for the buy side liquidity above there, so let me just keep on holding. And it turns out I was quite wrong, because after that it kept on dipping down. Look at that, negative 200 USD, and it just kept on pressing down and down and down and down. And at this point, even the client decided to close himself. I was willing to let it, just dip down a bit more, but then he decided to close it around 200 USD in our balance. And I thought we could have gave it more room. As you can see, it ended up shooting up, but we'll never know if it might have blown the account or not. I still believe it wouldn't have blown the account, but yeah, the client did not want me to risk the account to that extent. So he decided to close and withdrew 90 USD and left around 100 USD for us to work with. So that's the end of that video. Thank you guys for watching. Make sure to like, comment and subscribe if you haven't. I'll see you guys on the next video.